Hey guys, I'll be going over the cues with you and try to see what the market could do. There's a whole bunch of different scenarios they could play out. And one, we could have a double bottom about to happen. And what a greater time to do it is a 3-day weekend. I'm not too sure why the markets fell this far Thursday and Friday. And one thing, it could be manipulation. It really well could. To shake people out at the bottom before a run happens. And why I say that is because the markets are brutal. They'll go against you and make sure you lose. So what could happen is this double bounce. As you could tell, the volume has increased Friday. And that could be either shorts taking a short position and covering before a 3-day weekend, or it could be investors that know that this could be the bottom and the trend could reverse to a bullish trend. So let's say Tuesday morning comes up and the markets gap up. You know, it opens up. We'll gap this up. Let's see if it works. Yep. Say if it gapped up. Now the question is, will there be a sell-off, or will it continue to try to break this high right here and continue up and possibly either get rejected for a nice little dip buy and continue and start a new bull run, or will it sell off immediately and just consolidate and try to figure out what's going to happen? So if they shook a lot of investors out and loaded up, that could be a situation where we could have a reversal coming, or at least a short-term run. And another thing that could happen is, let me delete these real quick. Come on. So another thing that can happen is we follow this red line that I drew. And this is, I'd say, the worst case scenario. And I hope this does not happen. But if this breaks, if the double bottom, I give it to 338.50. If it breaks that and sees 338, then 337s and lower, I would wait this out and see where it's going to bottom. And where I think that could happen, the bottom, will be right here at this 314 to 323 range. This range right here could be the bottom. And why I say that is because this is an old trend line that could possibly still be in play. And I'm going to show you that on the longer term chart. So back in 2018, we kept bouncing off this trend line, never broke through until COVID came by. Now, even with COVID, the market fell and bounced off that trend, did a little dip, and retested it for the second time and flushed through. And then when we came up with this V-shaped recovery, we got rejected off that trend line, did a little dip, and finally broke through and continued our trend. So if this does happen, we could possibly see this area being a bounce. It could. I mean, shoot, it could fly past it and just flush downwards. You never know. But if you want to maybe wait it out and see if the markets continue to fall, this might be the area you could start buying some stocks. Or even if you want to buy the TQQQs or just even the Qs. So I'd say we could bounce from here and have a V-shaped recovery, which that's totally possible, or we could just have a little bounce and come back down to test that trend line for a second time and break through. And that'd be the worst case scenario. And the reason why I say this could happen is because, one, we got tax season coming up, and a lot of people are going to need to sell their stocks to pay their taxes. And what a better time to sell stocks at the lows. And it's like it's almost set up perfectly to just kind of make you lose the most money possible. And what worries me, I don't know how everyone traded last year, but you could tell there is a lot of new investors in this market. So say if you made $100,000 in 2021 and say you bought in November. November is when we started to see a huge fall in the Russell, the IWM, that's the small caps. And if you bought a dip, say you were loving life, you're making so much money and bought the dip and held, believing that stock would continue its trend and go higher. Well, if you held and did not realize those losses, and what I mean by realize is did not sell that position for a loss and did not buy back in within 30 days of taking that loss. Because so if you realize that loss, say you lost $50,000. So you made $100,000, so now you have say you have $150,000 total. Now if you lost $50,000, now you'll have $100,000, but you'll only make $50,000 if you sold. So if you sold and did not buy that stock within 30 days, you only pay taxes on $50,000 of profits. So you have a total of $100,000. Now, if you held through the first in those losses and did not sell and realize them, you will be paying taxes on $100,000 worth of profits. Now, let's say you did that and you sold and you kept trying to day trade your way back up, or if you're still holding that losing position, you could be in a bigger losing position. So now say you're down $70,000. When taxes come, a lot of people could be owing a lot of money, and that would force them to either sell all their stock and pay their taxes, or if the worst comes, they don't have enough money in their portfolio to pay those taxes. It all depends on how the market's going to go and how you've been trading. If you do realize your losses, that was a great idea, because this market has not been playing. It's just been brutal, it's been tough, it's been going down. And a lot of people, I have a feeling, that are in this position of losing and they didn't realize losses. So what could happen is if the market does bounce and people start going all in again and it starts tanking, that's more money, more people are going to lose. And yes, the stocks are at low prices, but don't think they can't go any lower. This is the stock market. It can go lower. So if a lot of people end up in that position of where they're going to be owing taxes, they're going to be forced to sell at bottoms, and that's going to add more selling pressure. And it could be horrible. We could end up in a bad recession because of it if a lot of people are in that position. Hopefully people aren't. I hope everyone would be able to pay their taxes, or if you're in a 401k or an IRA account, you don't have to worry about anything. You don't have to worry about paying taxes for the year because you only pay taxes when you pull money out. That's why I think this could happen, because the tax season is coming up and it could happen. So just beware and be careful in this market. One thing that you can see that the market isn't finished is if you look back on, the COVID crash, that fell like 27, 28 to 30%, while this has only fell, I'm going to scoot up, only fell 15 to 16% so far. It's still got a lot of room to go. And if we go back down to that blue trend line, that old trend line we had in 2018, that's like a 22 to 23% drop. And that's a crash. And that could bounce right there and start its V-shaped recovery. But if we are in deep doo-doo, it could go lower. And it could be like either the Great Depression, where they got all the retail in and people are loving life, making so much money and believing in the market, and all it takes is some big down movements to start freaking people out. A lot of people could end up not having enough money to pay their taxes. And that would lead to people selling cars, houses, or whatever to try to pay the taxes. That could be devastating for a lot of people. If people are in that situation and they're trying to find a job or a second job, it's almost like a domino effect in a way, because it would just lead to more people trying to find jobs, and then that means like more jobs will be trying to find the best worker or the cheapest worker, but as they see the demand is rising, is pretty much supply and demand. If a lot of people are in need of a job, the demand is a lot higher than the supply. And then I know companies will take advantage of that and probably say, hey, well, who's the cheapest worker that I could have? Not saying all this stuff will happen. I'm just saying it's a possibility. So keep in mind that the stock market could end up going lower. I hope not. I hope it's just a double bottom and it goes back up. But there's so much bad news. And the way I look at it is they got retail in at the top for a reason. And it's to take our money. So if that happens, I think it's going to be bad. So if you're looking at this, I don't know what your plan is, but I would say, if you know your risk, you know your tolerances, you know what you can handle with the losses or profits, like just be smart about it. Be patient. Do not rush back in. Don't buy every single dip because that could destroy you. Watch what the market does. Now, we know the market's very manipulated and it could just start skyrocketing Tuesday. You never know, but I would much rather see people not take that big risk and possibly lose everything, because the worst could always come. And it looks like we're just getting started. And it could turn into we're just in one big bubble that's bursting. What I found neat, as you can see, once we had that COVID sell-off, we did a nice run and we got rejected and started a trend. And we continued this trend until we broke it. And now we bounced off it, or we found a little bottom, we bounced and got rejected off that trend. Now we're heading back lower. And if you go to, let's zoom in right here. If you go to this area right here, it's kind of similar. You had a run and then a sell-off, and then we started a trend. And then once we broke it, we bounced, got rejected, kind of bounced around, broke the low, probably scared people, bounced, and then we came and broke it and then did a double bounce and then started a new trend. That's what could happen here. It's just on a longer term view right here. So what we could do is either we could have a double bottom or it breaks and then we have a double bottom and bounce from there and to start a new trend. That's always possible too. This is not a market to be YOLOing and going all in. I'd say take your time and try to see what the market is showing you. And to me, it's showing me that we still are in a trend to the downside. We still have not yet to break that trend. So we got this. You could start making your trend line if you want. Now, I'd say if we go lower or we break past this trend line, clearly it's got to be a good break. It can't just be, oh, it went up and came right back down. That's not going to help. We need to break past this line, and hopefully we could get a reversal in and some upward momentum. So that's why I'm saying it could be this area right here. This could be the bottom. Or worst case scenario, this could be the bottom. And I hope not, because this will be horrible. It would ruin 2022 for a lot of people, even myself, because it's just money that I'd have to sit back and just wait to see what happens. And if it keeps going lower, I'm going to be sitting out for quite some time. And by then, I'd be kind of scared to get back into the market, because who knows how long this could last. This could last for quite some time. It could be very choppy and be consolidating. And at that point, if a lot of people are out of the stock market, it almost becomes scary, I would say, because you don't know if stocks are going to go to like zero or get delisted, because there wouldn't be enough money in there to have these runs. That's why I said they got a lot of retail in, and that's why we got this explosive, good bull run. And that could be the end of this bull run. So if this video helps you out, awesome. This is just my thought. I'm not a financial advisor. And maybe this kind of clears up everything that could possibly happen. You know, at the end of the day, you're the trader, you're the one making the decisions on what to do. And I know there's probably not that many YouTubers out there that would, think the same way I think. A lot of people are more just pretty much in the financial and just knowing the facts and all that stuff, and that's what controls the stock market. But I do believe technical analysis follow a role pretty huge. And there's a lot of algorithm tradings that if certain levels get broke, it's sell, 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 or buy, 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 buy. So this is all I got. And oh yeah, I guess I could show you the SQQQs. And to me, let's just zoom in on here. As you can tell, yes, this falls. It's a decaying ETF, so it's always going to fall more than what the Qs rise. And this area kind of looks very bullish. It really does. It looks like it's going to break out. So say if it breaks out above this, we could probably see the SQQQs at like 53 or even maybe the $60 ranges. And if the Qs decide to tank more, you will see that. Or it could be a pennant forming where it gets rejected and tightens up, and then we'll see either, I'll draw it out for you. So it will tighten up where it could either break upwards, do the breakout finally, or it could break downwards past this trend. And that would be either the V-shaped recovery I'm talking about on the QQQs. And it's hard to tell what's going to happen. That's why, you just be patient and see what the market is going to do. If it does get rejected, see if it's going to go off this trend line, and maybe you can make some trades. It could always just break through just like that, or it could just break past. Well, that's all I got, and hopefully everyone continues to make money this year, and hopefully things start picking back up. All right, peace.